What's going on, guys? This is closing out the week of investing. It's Friday night, just ready to go over a couple things. We're going to go over investing. We're going to go over some wins. We're going to go over some losses. Yes, losses and failures do happen, but basically, we'll dive into the tracker, take a look at what's going on. All right, so here on this blue line, we have our tracker for the week. Today is February 17th of 2023. My weight, because we're about happiness, health, and wealth here, my weight is down to 283.6, so we're getting that right back on track, which brings my weight loss back to 15.1 pounds for the year. Our investment balance in our SoFi account, we are at $2,106.96. So yes, we have made it past the $2,000 mark. I don't know if you guys saw the little short that I did the other day, but we have broken $2,000. For those who are new to the channel, what we're doing is every Monday through Friday, we invest $50 into the stock market, and we're letting that ride. We're focusing on dividend paying stocks, stuff that's a little more stable for long term, and hopefully we can retire a little early because of this. So yeah, great news. We're at, again, $2,106.96 in that portfolio. And our dividends earned, we are now at $6.10. So we did get paid out a couple dividends, which is sweet, and it's nice to be over $5. I'm kind of mentally waiting to get over $10 because then it feels like a real number. $6 is great. It's much better than $1.46, which we were stuck at for so long. But yeah, I'm looking forward to seeing some real money, and March is going to be that month. So we're going to get into that in a second when we take a look at our investments. But the total portfolio growth, we are down $7.43. Now, again, keep in mind, I'm just going to scroll up here. When we started this account, the account had a balance in it of $329, and we were down $30.38 on that portfolio. So we did recycle this portfolio. We're basically up $23 so far. So that's pretty good. I'm actually very, very happy to see things declining because that means we're getting a better deal on the stocks that we're buying. YouTube income. We made $100, guys. Okay. So this is a little tough for me to really look at YouTube income, but I didn't know where to put it, so I put it here. Okay. Did we earn money on a check from YouTube? No. Okay. The channel is not yet monetized. We have enough subscribers to get there, so everyone for liking and subscribing, sharing the videos and stuff, thank you. I really appreciate it. It goes a long way. But we are about a third of the way there with our watch hours. So we're not quite where we need to be on that yet. So we're not actually getting paid from YouTube. But how did I make $100 of YouTube income? Well, as a lot of you guys know, I do trade on SoFi, right? SoFi Invest, which I'll have a link down in the description. And someone, or I shouldn't say someone, but people have used the link down in the description, and that has paid me. So just as you guys get money for signing up with that link, if you put $10 in, they give you $25 of free stock as of today. If you do that, I get a little kickback too, and they just gave me $100 of free stocks. Now, those free stocks, I completely plan on selling and investing them into something else. Okay. I was going to make a separate account, which I would call the Guru account, because I want to illustrate how that money can pile up kind of quickly. And show that these YouTube gurus who are talking about, investing and stuff, they're not making all of their life's money off of their portfolios with 40 grand in them. That's not how they're making their money. They're making their money off of referrals and YouTube income and stuff like that, which is perfectly cool. I think that's great. If you can make an outlet to make money That's awesome. I will never sell a course. I said that from the beginning. I don't want to sell courses. I'm not qualified to sell courses. I'm not a financial manager, wealth manager, credit counselor. I'm a guy in a triangle shaped room who loves investing. Okay. So with this first $100, because it's not from YouTube technically, I'm still going to leave it there. I think I'm just going to throw it into JEPQ. Seems pretty good, right? It's easy to track. I know that eventually when we open up that second account, I have the $100 that's there. But I do want that compounding in a stock. I don't want to just like leave it somewhere and forget about it. So I'm probably going to throw it into JEPQ for now until I can figure out another place to put it. That was long-winded, but it's pretty cool actually. So whoever that was, or whoever you all were, thank you. And welcome to SoFi. So total subscribers, we are at 1,260 subscribers. Total views, 60,342. So that's awesome. And then our watch hours were at 1353. So again, thank you everybody for supporting the channel. But now a little bit less on the journey and more about how we're getting there. Let's dive into Seeking Alpha. All right, guys. So here we are in Seeking Alpha. This is where I track my portfolio. Basically, we're just going to do a quick rundown of what we have and what amount of cash we have in each quantity. So to take us down by value, at the top of the list, we have SCHD, which is Schwab's U.S. Dividend Equity ETF. All right. We have $351.04, which is 4.56 shares. And year-to-date growth has actually come back up. So we're doing okay with this one. We're up 1.6%. I kind of hope that this goes down, but that's okay. After that, we have O, which is Realty Income Corporation. This is a real estate investment trust. We have $350.54 in that for 5.3 shares. So these two items right here, we are investing $10 a day into each one of them. These are staples in all my portfolios, so I figured there'd be a staple here. SCHD has actually outperformed SPY, which is the S&P 500, or an S&P 500 index. It's outperformed it for the past 10 years. So that's something that is really good. And their dividend payout is high. And when you reinvest those dividends, you make more money than in SPY or in VOO. So that's why we use that. And then Realty Income Corporation, ticker symbol O, they've increased their payout in their dividend every year for the past 26 years. So definitely a solid piece if you're looking for dividend income. But these guys are pretty good. I've had them for a long time in a couple portfolios. JEPQ. This is the third highest position. This is something that we are not buying on a regular basis. This is kind of like this is a new thing to the portfolio. So we're going to throw it in here. We're going to check it out. We're going to watch it, see how it does, watch its movement, monitor its dividend payouts. It's not even a year old. This fund has existed for less than 1 year. So I'm just a little it looks really good, but I'm timid. Do I throw money at this all the time? I'm not sure. Maybe I'll throw that $100 that I got from the SoFi signups, throw that into JEPQ, which is probably what I'm going to do. But we're watching it. We're monitoring it. It's up 6% year to date. We have gotten paid 1% so far in dividends, which is pretty stellar if you ask me. It's been 1 month of dividend payouts. So I think I am going to throw a little more money into this, but we aren't investing into it regularly. It's not on an automated investment. And that brings us to MPW. So MPW is Medical Properties Trust, okay? This is our highest performing stock of the stocks we're putting $5 Monday through Friday in. We are at $180.15. So we have 13.9 shares of this. And this thing just skyrocketed the other day. It went up like 8%. They've been having some, basically, they own a lot of hospitals and stuff like that, medical properties, and they lease them out to hospital companies, right? Um, they had a client that has been kind of like sketchy on if they're going to pay the rent or not, and it has been looming over MPW for a little while now. But there's another company coming in to take over those hospitals, so everyone's pretty stoked about that. I'm excited to see what MPW does over the next, couple months. I think we'll see some growth here, but it's already up 15.08% year to date. I think we will see much more growth from MPW. Again, I'm not a wealth manager, credit counselor, or financial advisor. I'm just a guy in a triangle-shaped room. But yeah, MPW is leading the way amongst the ones that are getting $5 a day. After that, we have Pepsi. We have finally made a full share of Pepsi, guys. I'm so happy with that because I love Pepsi as a stock. It's $177.21 is our position in it. Again, 1.01 shares, which is just finally we have a share of Pepsi. This is it's nice to see that we finally have a share of everything except for BlackRock. BlackRock is just so massive that it's very hard to get a full share of that anyway. I don't know anyone who really trades shares of BlackRock, but I want to be that guy. But we have a full share of Pepsi. I now feel like a legitimate Pepsi shareholder because I hold a share. JEPI, JEPI. So this is JP Morgan. It's their premium income equity ETF or whatever they call it, equity premium income ETF. This came out before JEPQ. If you see the similarities here, you have JEPQ and JEPI, also referred to as JEPI. We have $175.67 in JEPI with 3.2 shares. This is a pretty big dividend payer. As you can see right here, their average forward yield is 9.72%. So pretty solid payout from JEPI historically. They've grown their dividends. So, this is a good income generator for us to build the portfolio just a little bit quicker. We have AT&T basically at the same amount. $175.46 is our holdings. We have 9 shares. This price point's been kind of all over the place. It's been up and down, up and down. We are up on AT&T because of our dollar cost averaging. A lot of people right now are not up on AT&T because they buy it at 20, then it drops, and but the dollar cost averaging has really helped us kind of be in an advantageous position as opposed to not doing it that way. And their dividend looks great. Next, we have Procter and Gamble. So Procter and Gamble, this is the first position that we're really down on, and I'm so excited that we are down on it. We are not nearly as down on it as a lot of people right now. There's been a lot of talk about Procter and Gamble lately. So we have $170.08, which means we're about $5 down on our investment in Procter and Gamble, which is really not very bad at all. We have 1.21 shares, and this is why I'm excited about Procter and Gamble being down, is that it's a 2.66% yield for their dividend, which it's usually lower than that because the Procter & Gamble price is usually higher, but Procter & Gamble's so good at paying their dividend that I don't care what the price is. It could be $1 and I would buy it. It's really good, or at least I think it's good. But you can see that year to date, Procter & Gamble is down 9.51%. Okay, so on a $140 stock, to be down 9.51% would be much more than losing $5. So we're doing actually pretty well with that. Our position looks really good right now. So I'm happy with being down $5 when in reality we should be down roughly 16. So I again, dollar cost averaging is saving us while the market's going bananas. Which leading us into BlackRock, right? It's kind of fitting. BlackRock is also significantly down from where it was at the beginning of the month. And that is why we are at $169.64. So again, we're down about $5. BlackRock was trading at about 760 at the beginning of the month, and now it's down to 716. So took a little bit of a hit there, but again, this is BlackRock. I don't know if you guys know BlackRock, but they are a huge wealth management firm, financial firm. They own 10% of the earth or something ridiculous like that. Look into BlackRock if you've never looked into it. It's a very large company, and they're a very powerful company that have kind of been silent. You hear Fidelity and companies like this. BlackRock, not talked about enough for how massive it is. Same thing with State Street. I feel like State Street nobody talks about either. But anywho, that wraps it up for the things that we're investing into the portfolio. NASDAQ, as in the NASDAQ, right? These guys, we did have $135 in the portfolio prior to starting up this whole experiment. So, we got 2.31 shares of that. They're pretty much down. We're not buying into this. I'm kind of just waiting to get paid a dividend at the end of March, and then we'll sell this off to something else. Probably JEPQ, just to round out the portfolio. But and then lastly, we have this current cash currency USD balance of $100. That's the $50 or is it $100 of money that we got from SoFi. So that's sitting there. It's in 2 pending orders and 2 random stocks that I don't remember what they are. And I looked them up and I was like, oh, these are random. So I will sell those off and get my $100 and put it into something else. But yeah, so pretty cool. That's where we're at. Total value before trading or aftermarket trading was 2103. We had a good day, up $8 on the day, and they're still rating my portfolio as a healthy portfolio. So as for now, that's pretty much what we got. All right, so I want to talk about failure. Okay. I failed to hit a goal, and it's okay. Right? I did put a lot of pressure on myself to get this done, and I did fail, and I wish I didn't because it kind of sucks. But I did not finish reading Atomic Habits by James Clear by the 15th. It's so embarrassing. But I'm halfway through it, right? This is going to sound like a lot of excuses, and it is. I really should have finished it. It's actually pretty good so far. There's a lot that I've taken from it, but I did want to read the book by the 15th and do a little book report on it. So I'm hoping to get that done in the next 5 days. But it's been really, really hard, man. I mean, I'm so just about me outside of working on YouTube videos, right? Because I have a job in life. I do have a 3-year-old. His name's Jaden. He's awesome. He takes up a lot of my time though, and I try to spend time with him, and I try to, help him get food and stuff like that when I get home from work. And I do work about 50 hours a week. I work at a car dealership, and that keeps me very busy. So, that's one of those things that between that, my son, and then as a side hustle to support my car purchasing habit, I also started a rental car company during COVID. And so I do that as well. So between juggling those things, and I am pretty hands-on with the rental car thing too. So I'll be detailing a car for a client that's picking it up for a week, and I'm listening to the book on tape to get through the next chapter so that I can go back and put my notes in and stuff. So I am really, I'm actively trying to get that done. And you know what? I'm okay with missing the deadline. I really was stoked to try to get that done, and I'm trying to do it. But I'm also focusing on my health. I'm focusing on obviously the wealth building. I'm focusing on my family. So, with that said, part of the beginning of the book, Atomic Habits, I didn't know that the guy was a baseball player. And a lot of the stuff that he talks about is health related. So when he's talking about like health and I haven't gone to the gym yet, I'm like, I should probably get to the gym. And it's killing me because in one way, I'm like utilizing the book to set habits to go to the gym and be healthy. And then like I'll come and make a YouTube video for the channel. I'm getting the habit of doing that. But like he talks a lot about like desire triggers responses and like you have a need to get something done and whatever. So like when I'm reading the book and it's like, well, if you don't do this and you don't go to the gym, then you will not lose weight. And I'm like, that's a trigger. My immediate reaction to that is to go to the gym. I'm like, oh, I haven't gone to the gym yet. And then I'll go to the gym and I'll go to the gym for like 2.5 hours and work out like a maniac. And then I come home and it's like, oh, I got to shower. And then it's like 11. So that's like, I don't know. It's been like very motivating. I like the book actually a lot. There's some cool stuff in it that I want to talk about that I actually really enjoy in the book. I want to finish the book. Like I actually enjoy it. But yeah, I'm like buying it on tape so I can try to like make it through the book while I'm doing other stuff, and then I'll be like, oh, that was really great. And I'll like go back and listen to it again so I can really hear it. But I do want to get the book finished. I apologize that I didn't. I feel bad. I feel like I let people down who are excited to hear my thoughts on the book. But so far, I actually really do like it. And that is a failure of a goal last month, right? Goals in life, in my opinion, I've always thought that they should be realistic, attainable, challenging, and measurable, right? So part of that with being challenging, right? I think a goal should be challenging. Sometimes you're going to fail, right? And you can measure it. Did I read the book? Yes. Did I read the book? No. Guess what? I didn't read the book, so I failed my goal, which is okay. I just need to finish it, right? And now I can set expectations for next month, right? Next month, I do still want to pick a book, and I know that I need to kind of change, allocate some time for that because I'm trying. But very, very busy. And I love doing the channel. And I've also kind of fallen in love with working out. Building equity in a portfolio online and doing all that stuff is really fun. Don't get me wrong. I do like it. And it's really cool to see it grow. And hopefully you guys think it's cool to see someone take an account with a couple $100 in it and grow it to over 2,000 in a matter of a couple of months. I hope you guys find it motivating. I'm actually finding it motivating myself, to be honest with you. Like this is keeping me on the up and up and really working on this and other investments. But, I'm also really like falling in love with the gym. Like I feel like investing that time in myself and my health, I feel better all the time, like I really do. I hopefully I look better. That's one thing, but I feel better. Like my body feels less sore. I feel less tired. Just going to the gym and being mindless, like just not thinking about anything other than like, all right, now that I'm walking on the treadmill, I got to do this. You know what I mean? With the weights, I'll do like this, with the weights while I'm on the treadmill, like, then going to the gym and it's just like 1, 2, 3, slip 4. Like I'm thinking about throwing punch combinations in the gym because I do boxing, that kind of stuff. I really, really like it. And it's nice to just not think about stuff for like 2 hours, and then you come back and you're sweaty mess, and you're disgusting, you need a shower, whatever. But, that's taken up more of my time than I expected because I really have been trying to do that a lot. So, hopefully looking back, not only can we see the growth in the portfolio, but you can see the loss in my face. That's what I hope. I hope I look a little better than when this all started. I don't know. Maybe you guys can throw it in the comments if you think I still look worse, but sometimes I feel that way. But yeah, I mean, that's basically where we're at after finishing the month. We do have some huge dividends coming out in March. I mean, if you've made it to through this video this far, March on this portfolio, we have 7 stocks or funds paying us dividends. So it is going to be a very exciting time to be looking at the dividend tracker and all that. But we'll talk about that at a later date, I guess. So, with that, I hope you're all very, very well. Happiness, health, and wealth. Continue to build all those. And with that, roll the outro.